Good afternoon. Market news now. Top executives at Goldman Sachs, JP Morgan, as well as Bank of America all sounded downbeat in remarks about the economic outlook, hurting risk appetite globally and triggering fresh recession signals from the bond markets. In commodity news, Brent crude is trading at $78.63 a barrel, falling below $80 for the second time this year. Meanwhile, locally, South Africa's fourth largest bank by market value says it expects double-digit growth in full-year revenue, although it warned that credit impairments were expected to increase as higher interest rates begin to negatively affect consumer finances. ABSA is scheduled to release its financial results on March 13th, 2023. Short-term insurer Outsurance, which recently completed its transition and rebrand from Rand Merchant Investment, listed on the Johannesburg Stock Exchange. To talk to us about the latest when it comes to the markets, we are joined by Carmen Berlana, who's a portfolio manager at Sanlam Investments. Carmen, thank you so much for your time. Given some of the comments that we are getting from some of these executives in the US, what's your sense of, I suppose, call it global market sentiment right now?
Yeah, I think the overriding theme at the moment is caution on the back of the better than expected jobs numbers last week out of the US, as well as their service numbers. So I think that that's given a lot of cause for concern that the economy is not slowing down. Add to that the fact that we've got the Chinese numbers today, which show that there's been a continued slowdown, which would be expected with the high restrictions that we've seen in terms of COVID. So despite the fact that they are decreasing the restrictions, or they've given us the announcement of the plan, doesn't seem to have given any sort of positivity to the market. So all in all, I think the market is looking to next week with the FOMC's decision in terms of the interest rate increase.
On the back of what I've just read in my intro in terms of what ABSA is expecting regarding credit impairments, we also got 10-month updates from the likes of Nedbank and Standard Bank. How concerned are you about the state of the South African consumer from a financial perspective?
Yeah, we've seen, I think it's been a bit of a different impact going into this high inflation and high interest rate environment. We are coming out of a period of the pandemic where we saw household debt at inflated levels, as we saw people weren't spending as much. Add to that the fact that we saw our local GDP number coming in a lot higher than expected. So it seems that the consumer has been resilient. We are, however, seeing in terms of the credit profile for consumers that is starting to show some weakness. So that should be some cause for concern, specifically because the interest rate's likely to remain higher for a lot longer based on what we're seeing globally. So in terms of the consumer health, starting to show signs of weakness, which will be a cause for concern in general across the economy.
Looking back at some of the results that we've gotten, at least over the past year, from some of the South African listed companies, what kind of an earnings picture are you imagining, at least for the first half of 2023, in an environment that we're currently in that's filled with, I suppose, a little bit of uncertainty?
Yeah, so I think one of the key things we've seen is that we haven't seen significant decrease in earnings expectations from the investment environment. So we haven't seen significant downgrades in terms of these estimates, which is cause for concern, specifically on what we've just discussed around the consumer that remains under pressure. I think the key thing is to look at the macro factors. So specifically what inflation continues to do, whether we do see a turn and a decrease in the inflation number, and obviously the Reserve Bank's decision around the interest rate. So I think those two are the key factors to keep an eye on going into the early next year. And the likely impact is going to be probably caution around where we see earnings. A lot of the guidance that we've seen come out of the recent results have said that management in many of the companies remain very, very cautious going into the end of the year, which is likely to have an impact into the first half of next year. So I would caution towards the downside.
Taking things stateside, are you expecting a bit of a growth story when it comes to US stocks versus where we are right now?
So on the back of what we've been seeing, the economy there does not seem to be abating. The increase in the interest rates has not as yet had an impact. So similarly to what we're expecting to see locally, if we continue to see high inflation and therefore higher interest rates for longer, the consumer is definitely going to feel the pain at some point. And if that does lead to a recession, my assumption would be that we definitely see a downturn in the US stocks. Compared to previous bear markets, this has been light comparatively. So if we see a further deterioration in the macroeconomic factors, we are likely to see a deterioration in these stocks as well.
As an in-house view at Sanlam Investments, is there consensus at least on what kind of recession we might see? Is it deep and shallow, or is it just, short and probably not lasting very long?
I can't comment on that at this point in terms of what the internal view is. But what I will say is that the approach is definitely one of caution going in. The extent and the extremities of the recession, not sure about where that will land as yet.
Is there an argument to make for some of the real assets like your commodities or even the property sector right now?
It really does depend on what your current portfolio holds, and specifically in terms of your investment horizon. So whether it's short-term versus long-term, it's a bit difficult to sort of pick in terms of a longer-term view on the commodity side. So if you do see some weakness and it adds value in terms of diversification to your portfolio, it would be something to consider for the short term in terms of investing directly into commodities or property. Having said that, on a longer-term horizon, it's probably best to look at the equities.
All right, let's leave it there. That is Carmen Belwana, who is a portfolio manager at Sanlam Investments. Of course, tomorrow we're going to be looking at Japan's GDP, comments coming out of the ECB President Christine Lagarde, as well as US initial jobless claims. That is it from me. We continue with more news with Nsenga Gunta, so stay tuned.